Hey, good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 22nd, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. These are our trade plans. We create our two main hypotheses, hypo 1 and hypo 2. Nobody can tell you what the market's going to do. Therefore, we create possible scenarios, then wait for the market to show us who's in control, and then we execute the plan that best suits the market, not the other way around. Then we have two alternative hypotheses, which is our trend type scenarios, and where those would possibly kick in. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap. Offer education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So yesterday was a holiday for us here in Canada, so I did no real trading. I did a couple small little scalps early in the morning and then took off for the day. We did gap up yesterday. We gapped up from Friday, and we have our week open at 27.2875. And then our RTH open for the week was 27.2875. So basically, we opened in the RTH session where we opened in the Globex for the full session. This was looking at a possible gap and go scenario. They had an open drive. They're pushing up the key target above is this key line in the sand and our month high. Our month high is up at 41 and a quarter. We have a new week high, which we put in yesterday at 39 and a quarter. We got up there in the Globex, didn't quite break it. We got up to a high overnight at 39. Then we had some news that came in, rotated us down 14 points. Right back into that key area, and then found the buyers and went up. And then we just basically went sideways in around this 32. Now remember that 31.50 and 33 and a quarter are two former microcomposite VPOCs. So we're finding price acceptance around those again. And we basically just went sideways into the close. A lot of ugly looking profiles as of late. In the overnight session, inventory is fairly positive. It's about, I'd say, 75% net positive. Basically, once Europe opened, Europe rotated us up, and we've got a VPOC shift up. Started the night down here and just stair-stepped its way up, and we've got a Globex VPOC right now at 37.75, and we're trading at just one tick below it. And we have a week high here overnight, the double top at 39 with the RTH top at 39 and a quarter. So this is a very weak high. I am anticipating a new month high today. But we'll probably come back down and balance inventory. But these gap and goes, once we start going into this gap mode, we're seeing the tendency just to gap and go and continue. So we'll have to wait and see. Let's just take a step back, take a look at the news. No real news, other than the 10 o'clock. We've got Richmond Manufacturing Index and Richmond Manufacturing Shipments, Richmond Services Index. And then at 11:30, we have the 4-week and the 52-week bill auction. and then the two-year note auction at 1 o'clock. Of course, tomorrow we get the Fed minutes, so they could balance out today, but I think they're going to make a push for that that key line in the sand above. So taking a look at the macro to micro, something I always like to do every day, very simple exercise. I start with a simple candlestick chart. I start with a monthly, and I work my way down into the different time frames. I use a 9 EMA, 20 SMA, and basically what I'm doing is just verifying where we are in terms of that time frame from the macro to micro, so I understand that I don't get myself into a bias that could go against the bigger picture. I'm looking for, I use a 9 EMA, 20 SMA. I'm looking for slope and separation. Is price paralleling the 9 nicely? Is it coming down and challenging the 9, or up if it was a downtrend? Or is it violating and possibly changing the trend by breaking the 9 and the 20? So you can see that 14 months of one-time framing up, beautiful trend. One-time framing was violated in February, March, and April. We have challenged in May, but for the most part, we keep bouncing off of this 9 EMA and continuing this larger time frame trend up. Weekly, it looked like we were going to get a possible trend change, but they've fought it, and the bulls have taken over again, and we're above the 9 and the 20. No real slope or separation, but the trend is looking like it's got a continuation pattern coming. On the daily, a little bit different story. We were starting to stair step our way down, push backfill, and now we're getting into an upward trend on the daily and getting slope and separation to the upside. Going to the intraday, the 4-hour, we basically were looking at the possible rollover. It didn't happen. They took it back, consolidated, and then, of course, we gapped up on the weekend, and we've got slope and separation to the upside. We don't even challenge the trend until we get down to the 33. And then going to the 30-minute, you can see that we've had a pretty strong trend on the 30-minute. They're coming down. They're likely going to come down and test this level again in the 32 level if they don't hold this 36. I'm watching 35.75 myself, and I'll show you why in just a minute. Taking a look at the big picture structure, you can see that we've had this balance here as we fight for the breakout. We broke out, they gapped up, they were unable to hold, they gapped back inside of the longer time frame value area that has the value area high at 19 and a quarter. Then they've been fighting this level, and then of course we gap back up. Now the high of the value area is at 33, right where we closed yesterday, and we were unable to hold above the value area coming into the close yesterday. But in the Globex, they've come back up. We're inside of yesterday's day, so it's not going to be a gap against the high. It's likely going to be, unless they take it up now, it's likely going to be a gap against the close. Inside, if we don't hold the 35.75, look for them to test the 33.75 and take us back towards the open, and the VPOC at 32.50 from yesterday. But we got a bit of a double distribution going on here with 25, which is the low from yesterday, as a CLVN. If we get below that, we're likely to come all the way back down to this 18, 19 area again. So taking a look at the overnight numbers. I've already got my overnight high and my overnight low, 10, just under 10 points, 9.5 points. We are outside of value, but inside yesterday's range. The value area high is the 35.75. That's why I'm watching that 35.75, but it's a bigger picture number as well. It's also a LVN from overnight action down here. You can see that the 24-hour VWAP and the LVN are right there. The daily ATR is running at 31.25, so our downside daily ATR target is actually all the way down here at 27.07.25. So don't say we don't have the range capabilities to go down and start filling the gap down here and take out some of these targets that we left below. And based off of the overnight low, our daily upside ATR target takes us all the way up to 27.6175 and giving us a push up. Remember that this gap here at 49 is also the 61.8 retracement from the move from the all-time highs to that fractal low down at the 25-29 area. So that's a key area to come back to test. We have a zipper measured move that's set up right now with the target at 44.50. Our key line in the sand is still going to remain at the 41.75. My over underline is going to be down here. Believe it or not, it's going to be at the VPOC because that's a key area for us to hold, and we could easily go down there and test it with where we are. You could use the value area low down here at 29. That would be valid, but based on the action in this area, I'm really watching the low from yesterday at the 25 because that's the key CLVN that is on the bigger picture. So in terms of hypotheses, I'm looking for a open auction in range, just outside of value or just inside of value. I'm looking for a move down into the 33. This is the first spot that I'll be looking for them to possibly bounce, but between 33 and 25, I'm looking for the buyers to step in, rotate us up into the 41.25, take out the May high, test this key line in the sand, and then break through and come up into the mid of the gap at 49, and then probably go sideways there, if not move back down towards the 41 area and closing somewhere up here in the 41 to 44 area. That is hypo 1. Hypo 2 is a gap and go day, a open auction in range, or an open test drive. Test the 35 level, but fail to close the gap, and then push up through to 41.25 very quickly, push up into the 49 and get continuation and come and fill this naked close up here and close somewhere up in the 55 or 57 area, maybe a late day probe up to the 2760, but I would expect to be closing somewhere around the 57 level. So that's equal weight with hypo 3 as well. So hypo 1, 2, and 3 are really equally weighted because of the context that we're in. And hypo 3 is an open auction in range, a push up, a push into the 41.25, and somewhere between the 39.25 and the 44 area, I'm looking for sellers to step in, rotate us down into the overnight VPOC, and then get a push down into the 18 level, and then work our way back up and close somewhere inside of the 25 to 35 area. That is my hypo 3. And again, it's equally weighted with possible gap and go or our first scenario. The hypo 4 is a breakdown day. Failure to get above the key line in the sand. Sellers take control early, take us right through yesterday's range, come down here, test this key line in the sand, and the naked close and the naked VPOC down here, fail and come down and come back down into the low 2700s and close back down here somewhere. So those are my four main hypotheses. The fifth hypothesis is an inside day, and we basically just chop between 25 and 39 and just go sideways as we consolidate up here. I'm hoping that doesn't happen. Taking a look at gold. We just continue to chop around the composite VPOC that goes all the way back to 2008, October 24th, 2008. We've come so far tonight and tested the value area high up here, but gold just doesn't look very strong yet. We are seeing some buying coming in down here. So if we can break back above the 94, look for them to push up into the 13. And then I'm going to be watching this 13 to 1304 level for a possible short back into this 1290.80. If we don't hold the 1288, then I think we're going to get a bigger dip down into this 79. So just be watching for that. That's going to complete our pre-market session. As always, trade well, trade safe, and I'll catch you on the flip side.